The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Happy Wednesday, everyone. Happy hump day. Welcome to another edition of Breakout Investing on TFNN. 877-927-6648 is the number to use if you want to give me a call, talk about this market. You can catch Breakout Investing 5 days a week on TFNN from 3 to 4 Eastern. If you can't listen live, no worries. Head over to iTunes. You can pick the show up daily as a podcast. Feel free to leave a review if you'd like. And don't forget, you can listen to all TFNN programming on your smartphone. Open your smartphone browser, type in tfnn.mobi, and you can get the stream that way as well. If you want to look at charts live right along with me, you can do that with Tiger TV on the homepage of TFNN.com. You not only get the audio of the show, but you also can look at charts live right along with me. Channel 1, the show is carried live, and it is archived in Channel 13. Looks like another day of distribution for the major averages. The Fed Beige Book came out, and the Beige Book of economic conditions around the Fed's 12 districts showed an economy expanding modestly in late August and early September. Only 2 districts reported slowing. What did it do for the market? Unfortunately, not much. Here's a look at the Dow trading at near its session low, holding just above its 50-day moving average, sort of do or die time for the blue chip index. Right now, the Dow is down about 125 points, 0.9% to 13,348. S&P 500. Fortunately, the news is not much better here. Let's see what's going on with the benchmark index. It is also near its session low. Similar to the Dow, it has not yet taken out a key support level, the 50-day moving average. S&P 500 right now down close to 9.6% to 1432. The 50-day moving average for the S&P 500 is 1426. So it's only about 6-7 points above the key support level. NASDAQ composite, this is really where the problem is in the market here. NASDAQ clearly the weakest out of the 3 indices, much weaker than the Dow and the S&P 500 at this point. NASDAQ composite fell below its 50-day moving average yesterday. It was a unequivocal distribution day. Looks like we're going to have another distribution day for the NASDAQ and the NYSE indices today. At last check, volume was tracking about 10 to 15% higher than what we saw up Tuesday. NYSE volume on Tuesday was slightly below average at about 607 million. Yesterday, NASDAQ volume was average at just over 1.6 billion. So volume tracking slightly higher today. Like I said, about 10 to 15% higher than Tuesday. So problems for the NASDAQ composite. Let's check out the NYSE composite, probably one of the most broad-based indices out there. You can see similar to the S&P 500 and the Dow. It also is still holding above its 50-day moving average. And we'll take a look at the Russell 2000, some underperformance here as well. It is just barely holding its 50-day moving average. Russell 2000 right now down 0.2%. Not much selling in the Russell today. Last trading around 826. Its 50-day moving average at 825. So a whopping 1 point above its 50-day moving average. So we had the Fed Beige Book came out. That really no news in the Beige Book. It's sort of an anecdotal look at economic conditions across the Fed's 12 districts. Inside the Dow, I mentioned the Dow underperforming today. Let's take a look at shares of Chevron, CVX. It is a Dow component that is getting thumped today. Late Tuesday, the company warned that slumping oil prices and production would cause earnings to be substantially lower in the coming quarter. This is on top of news yesterday that the Supreme Court refused to block a $19 billion judgment against Chevron by an Ecuadorian court for pollution in the Amazon River. So Chevron looking not so hot here. Gaps below its 50-day moving average today, down close to 4% to 112.73. Weak technical action by Chevron today. Of course, we heard from Alcoa last night, another Dow component. It is getting taken to the woodshed. Noted its weak technical picture yesterday. You can see how its 200-day moving average had really turned into resistance the prior 3 trading sessions. Today, shares down 4.2% to $8.74. Nice beat on the bottom line and top line by Alcoa, but not enough to bring new money into this stock. Earnings were down 79% from a year ago to 3 cents a share. The estimate was for 1 cent. Sales down 9% to $5.8 billion. Some stocks are bucking the trend in the Dow today. Let's check in on J.P. Morgan. At least at one point, it was outperforming. Yeah, J.P. Morgan's still higher today, up 1.3% to 41.91. Interesting chart. Really not showing anything in the way of sell signals here ahead of its earnings report on Friday. We also have McDonald's. Last check, it was trading higher, most likely riding the coattails of Yum Brands, which reported earnings late Tuesday. Of course, Yum is the parent company of Taco Bell, Kentucky Fried Chicken, and Pizza Hut. But shares of McDonald's, you can see it tries to get back above its 200-day moving average, hits an intraday high of 93.37. It is trading, has given back its gains, still up 48 cents, 0.5% to 92.59, but that is its session low. So McDonald's still not looking so strong here from a technical perspective. And finally, Walmart. Walmart had its annual meeting today, and Walmart is was trading nicely higher. Actually tried for a technical breakout today. Imagine that in a downtrending market that's under distribution. Well, Walmart might be viewed as a safe haven stock here. Shares of Walmart up 1.7% today to 75.43, trading in the bottom half of its trading range right now. But at its annual meeting, the company expressed confidence about the holiday shopping season, said that customers have already made $400 million in layaway purchases in less than a month, half as much as they made in the entire 2011 holiday season. So Walmart U.S. Feeling particularly good about the holiday shopping season. So good news there. Taking a look at crude oil. November crude oil down $1.14 today, 1.2% to $91.25 a barrel. Gold up 10 cents to $17.65.10 an ounce. See what the GLD is doing today. This is the ETF that trades at about 1/10 the price of an ounce of gold. It is working on 4 straight losses here. We'll see if it can turn positive like the front-end contract did, but not by much. Gold right now down 6 cents to 170.93. U.S. dollar index recently trading around 79.92. Check in on a daily chart of the U.S. dollar index here. It is, like I said, it was a big move for the U.S. dollar index yesterday. Closed at 79.92. $79.95. It is right now at $79.92, so it's only down about 3 ticks today. But there is some pretty significant resistance that the greenback still has to work through to prove that an uptrend is for real. First of all, its highs last week, I think it was right around 80.15. Needs to get through that. Once it gets through 80.15, if it does, then it's got that 80.70, 80.90 level to deal with. So not clear to me that the greenback is ready to start a new uptrend here. If it does, that's probably not going to be good news for the stock market. So what we have right now is clearly a market rally that is under pressure. It seems to be right teetering on a correction here. Headed into today, we had 6 higher volume declines in the S&P 500, the NYSE Composite, only 4 for the NASDAQ, but your leaders really are starting to look vulnerable here. Let's take a look at Apple. Mentioned Apple yesterday. This stock hit a high of $705 a share back in September. It corrected about 11%, fell below its 50-day moving average, revisited, came very close to its last swing point, right around $620 a share. Yesterday it hit an intraday low of $623 before closing up near its high. The stock is following through a little bit today, up $5.69, 0.9%, bucking the market trend here. Apple last trading around 641.54. I do think that its 50-day moving average here at around 659 could be a resistance level for now. So I know people that are trading Apple, those that bought yesterday near the low certainly are looking good, but I do think that 50-day moving average could be problematic for the stock. So we will see what happens. Mentioned J.P. Morgan Chase in the Dow today, outperforming. Let's take a look at that XLF, the Financial Select Sector Spider Fund. It is still holding comfortably above its 50-day moving average at 1538. Last trading around 1594, only down a penny on the day. One of the holdings of the XLF. Let's check in on Wells Fargo. Also holding up well, relatively speaking, compared to some of these tech stocks that are selling off in spades. Wells Fargo still holding above support as well. Wells Fargo is being sued by the U.S. government. This news broke late Tuesday for misrepresenting the quality of 100,000 loans made from 2001 to 2005. The suit alleges that the bank knowingly issued loans that didn't meet requirements for FHA backing. FHA is the Federal Housing Administration. When the loans defaulted, of course, Wells Fargo got insurance payouts from the FHA insurance program. So they're being sued by the government. We'll see how that goes. Obviously, news of the lawsuit not really affecting Wells Fargo today. It is up 12 cents to 35.22. It also reports earnings on Friday. Take a look at some other movers today. Shares of FedEx making a big move today. How about that? A lot of technical damage done to FedEx in recent weeks. Of course, FedEx was one of the first earnings warnings that we heard back in mid-September. Norfolk Southern followed soon after that, but shares of FedEx up 5.6% today, bucking the market big time. Last trading around $90.36. The company launched a program aimed at improving annual profitability by $1.7 billion within 3 years. So investors like the sound of that. Folks, we got a lot more news to get to, more stocks to discuss, give you my take on this overall market, what I've been doing with the Ultimate Growth Stocks model portfolio. We'll discuss all of that when we come back. You're listening to Breakout Investing on TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing. Don't forget, folks, 30 days free of Ultimate Growth Stocks, my weekly newsletter and model portfolio. You can check that out right on the homepage of TFNN.com. Just click the Newsletters tab on the home page, then click Investment Newsletters. 30 days free to see how I cover the market. I have been lowering my exposure. I never got too fully in here, got maybe 60%, maybe 65% invested. Now I'm about 40% invested, something like that. So don't have a lot of exposure here, giving some holdings some room to work here. Yeah, some do look a little vulnerable, but we will just monitor and see how things play out over the next few days or so. But 30 days free of Ultimate Growth Stocks right on the homepage of TFNN.com. Markets down, investors buying bonds. That is has resulted in lower bond yields today. The 10-year note at 1.69% off its intraday high of 1.75%. 30-year bond currently at 2.89%. 0.5%. All right, let's take a look. Mentioned Apple. Let's check in on Apple one more time here, because there was another headline I saw today that according to China media reports, the iPhone 5 could start selling in China this month. Apple, after early strength, is near its session low, still up 0.6% to 639.59. This is going to be a tricky stock to play, I suspect, in coming weeks. Of course, they have earnings coming up, and a lot of execution challenges lie ahead for the company. Not only making sure that iPhone 5 is in plentiful supply, the people at Foxconn and China keep making the phone in a timely manner, but they also have rumors of an iPad mini that is going to be available soon. So we'll see if Apple can execute here. What I do know is that big sellers have definitely been in the stock. It hasn't been rampant distribution, but it has been distribution, and sometimes when you see early signs of professional selling in a stock, it can be a sign of more to come. So Apple clearly has suffered technical damage in over the past 2 to 3 weeks. Let's see if it can recover. I think its technical picture will look a lot better if you start to see some heavy volume buying, and not seeing it yet. How about Facebook? Remember when Mark Zuckerberg spoke, I think it was last month, sort of allayed fears and presented himself very well. That resulted in a nice rally for the stock in September, and Facebook has given back just about all of those gains. Under pressure again today, down 3.4% to 1954. Earlier today, Bloomberg reported that the company, when it was initially filing IPO papers with the SEC, they tried to downplay the risks related to its mobile business, and the SEC said they just needed more information. Shares were also weak today after Oppenheimer warned that a slowdown in desktop usage in September could mean that estimates are too high for Facebook in 2013. Right now, the company is expected to earn 62 cents a share in 2013, up 29% from 2012. Facebook has been profitable for a few years now. It turned its first annual profit in 2009. It's been profitable ever since, but full year earnings this year expected to fall just a little bit from 2011, but pick back up in 2013, again rising 29% or so. But Oppenheimer thinks those estimates might be too high. There was new data from ComScore today that showed a 20% decline in Facebook desktop usage for the company in September. That was an acceleration from a 14% drop in August. So I can't embrace the long case right now for Facebook. It just seems that uncertainty reigns, and when you're buying a stock when there's nothing but uncertainty, you're basically just rolling the dice, and you don't really have an edge. And I almost kind of feel the same way about Apple, with the selling that has been seen in this stock over the past 2 to 3 weeks. Why has there been selling? Well, there's a lot of uncertainty around that company. Uncertainty now that Steve Jobs has been gone for a year. Is there a management team that's going to be able to to continue to execute and grow the company? I know Apple has its fans, but bottom line, there's a lot of uncertainty around that stock too, which has skewed its technical picture quite a bit. So avoiding Apple for now. May come back to the stock at some point, but it needs to prove itself a lot more. All right, folks, stick with me. Headed into break number 2. We'll be back in about 4 minutes. Big, long segment coming up, about 15 minutes or so. 877-927-6648. Give me a call. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing. Folks, don't forget about the Great Panther Silver Halloween giveaway at TFNN.com. TFNN and Great Panther Silver are giving away 27 pieces of silver for Halloween. A winner will be announced every broadcast hour from October 29th through October 31st between 9 a.m. and 6 p.m. Eastern. On October 29th and 30th, we'll give away a half-ounce piece of silver. And on Halloween Day, October 31st, we will give away a full 1-ounce silver piece. So be sure to check that out. Register for free right on the homepage of TFNN.com, the Great Panther Silver Halloween giveaway. Good stuff. All right. Checking in on the markets here, still trading near session lows. Dow Jones Industrial underperforming today due to weakness not only in Alcoa but Chevron as well, taking the two biggest decliners in the Dow. Right now, the Dow is down 131 points, basically 1% to 13,342. The S&P 500 is next, down a little over 9 points, 0.6% to 1432, and the NASDAQ Composite still underneath its 50-day moving average here, down almost 16 points, 0.5% to 3,049. So looks like another day of distribution taking shape in the markets today. We'll see how we close. Like I said, volume on the New York Stock Exchange and NASDAQ tracking higher than what we saw Tuesday. Didn't see a whole bunch of volume in the market Tuesday, again slightly below average at 607 million on the NYSE. NASDAQ volume on Tuesday pretty much average at just over 1.6 billion. But right now looks like volume continues to track about 10% higher than Tuesday. All right. Mentioned McDonald's outperforming, bucking the trend in the Dow. A lot of that has to do with really nice earnings from Yum Brands late Tuesday. Nice gap up for the stock. It's trading right in the middle half of its trading range today after hitting an intraday high of 72. The stock has backed off a little bit, but still up 7.5% to $70.60. Earnings up 19% from a year ago to 99 cents a share. That was a couple cents better than expected. A little bit of a sales shortfall, up 9% to $3.57 billion, but investors were encouraged that same-store sales in the U.S. and China both rose 6% from the year ago period. Also in earnings news, we had results from Costco earlier today. Costco, kind of an ugly day of trading here. Looked like it was going to be a strong day for the stock. Hits an intraday high of 104.43, trading all the way down near its session low. This is kind of typical in a market that's under distribution. Really just hard to generate buying interest. A market, it just has a hard time responding to positive headlines. I mean, the numbers from Costco were very strong, no question about it. Stock still up 1.9% today to 101.53, but trading near its session low after early strength. Earnings were up 29% from a year ago to $1.38. The estimate was for $1.31. Sales up 14% to $32.22 billion. That was also above expectations. Same-store sales up 6% in the U.S., 2% gain internationally. The last breakout for Costco, and I want to show you Costco's breakout because it is a little bit extended here. The last breakout for Costco was in late June when it broke out over $92 a share. So this is a stock that probably needs to base and consolidate gains for a while. You can see it firmed up at its 10-week moving average in this area here, came back down to the 10-week moving average, still holding above the line, but I'd let this one kind of pause, digest gains for a little while. I don't think it's buyable up here. Couple of earnings shortfalls to talk about. Helen of Troy down almost 12% today. Just a decimation of share price, down 12% to $28.16. This is a consumer products company. Earnings fell 3% to 72 cents a share. The estimate was for 85 cents a share, so they missed by 13 cents on the bottom line. Sales up 4% to $287.4 million. That was well below expectations as well, which were for $310 million in sales. The company also said it expects fiscal 2013 earnings of $3.50 to $3.60 a share. The estimate was for $3.76. So bad news all around at Helen of Troy. And then HCSG. This is a high-quality stock, but again, a market that's a little bit sick here. Healthcare Services Group selling off today. Had been showing relative price strength, good fundamentals, good chart. Stock is down 3% today to $22.82. Healthcare Services Group provides housekeeping and food services not only to hospitals but also nursing homes, long-term care facilities. Nice technical breakout for the stock last week, but yet another breakout in trouble here. Earnings were up 13% from a year ago to 17 cents a share. Sales up 25% to $273 million. So good growth at HCSG, but a market that is just not willing to let stocks run. True Religion, TRLG, another stock in the news today. It gapped up and is having a great day today, up 22% to $25.63. News here is that the company is considering putting itself up for sale. True Religion, mostly known for its jeans that are very, very expensive. I think a pair of jeans at True Religion can, run as much as $200. So they're considering putting themselves up for sale. Interesting to see the home builders still holding up while the market is a bit unsettled here. The iShares Dow Jones U.S. Home Construction Index Fund holding comfortably above its 50-day moving average here today, up 3 cents in a down day for the market to 1970. Another ETF that is extended. The fact that it has pulled back off its recent high, just over 20. I don't think it means that it's on sale here. I suspect we'll probably get a test here of the 50-day moving average down at 18.5. If it finds support there, I'd really like to see fresh signs of institutional buying, but I'm kind of just letting the home builders be for now while the market is under distribution. So ITB hanging in there just fine. Home builders have been, some of the best performers in the market. So when you see higher volume declines making their presence felt in the indices, it's usually the fastest movers up are the most vulnerable on the way down. But so far, home builders acting pretty well here. Check in on Ryland Group, RYL. Another home builder here, perfectly normal chart here, really not showing any signs of institutional selling at all, holding near its highs, holding above support. Stock is up 1.2% today to 31.75. Some other strong performers in the group. Here's Standard Pacific. Came down to its 50-day moving average last week, found support, still holding above the line. This is a low-priced stock in the group, but it does have good fundamentals, good growth prospects. Standard Pacific up 6 cents today to $7.08. So home builders acting well. Interesting news from Zillow, the online real estate firm. It's been under a lot of pressure. Still damaged goods here, in my opinion. Recently broke below its 50-day moving average. Signs of institutional selling in this name as well. Negative headline recently, the SEC wanted more information about its accounting. That caused some pretty big sellers to come into the stock recently. It's underneath its 50-day moving average, looking very tired here. But Zillow today launched some free rental products as part of its integration of Rent Juice, a company it acquired in June for $40 million. Zillow is now offering CRM tools, customer relationship management tools for rental companies, including mobile apps to help track rental applications and rental payments. So is the news helping the stock? Well, after hitting an intraday high of 38.40, Zillow is near its session low, still up 17 cents to 37.68. This is another stock, again, technical damage done means that I would not touch it down here. Other stocks holding up well here. Let's take a look at Grand Canyon Education. I haven't talked about this stock very often, but very impressed with its relative price strength. Grand Canyon Education is a provider of post-secondary education services in the U.S. and Canada. Let's take a look at a weekly chart for Grand Canyon. And well, do I have? I swear I always save some of these charts, but I guess I don't. Well, the daily chart will have to do, but you can see a big gap up here in early August, has been steadily moving higher. Really no sellers in this stock at all. So, when you're in a weak market like we're in now, you want to pay attention to those stocks that aren't going down and are holding gains smartly. Grand Canyon Education, LOPE, would certainly fit the bill. Another stock acting very well here, not showing much in the way of sell signals at all, is Rackspace Hosting. Under a little pressure today, it hit an intraday high of 69.12. It is now at 67.09, up 4 cents on the day. I would really love to see a pullback in this name. Rackspace, I think, is still has potential to go higher. I think this company still is in the early stages of growth. Very stingy about giving back its recent gains. Earlier today, William Blair and Company said the cloud computing service provider is in position to win more business from retail bellwether Walmart. I know I have a weekly chart for Rackspace Hosting. Let's pull that up, and it would be a gift, I think, if Rackspace, if you could get a pullback down to that 62.70, maybe 63 level, be about $4 lower than where it is now. That is a likely support area, and I think would be a great opportunity to pick up some shares if it does in fact find support at its 10-week moving average at around 63. So we'll watch and see if that happens for Rackspace Hosting. Take a look at some other decliners today. Celgene under quite a bit of pressure in heavy volume. Stock is down $2.49, 3.1% to 77.42. Still holding above its 50-day moving average, but some big sellers in the stock today. I wasn't able to find any news on Celgene, but after a big uptrend since the market started rallying in July, it finally looks like Celgene is ready to take a breather and consolidate gains here. One aspect of an unhealthy market is when leading stocks start to stumble, leading stocks start to break support, and you're seeing more and more of that on a daily basis. LinkedIn, recent breakout over $113 a share. It hasn't completely broken down yet, but it's trading down at 111.74, down 1.2% today. It closed just above its 50-day moving average yesterday, suffered a big percentage decline in higher volume. It is extending losses today. Volume isn't as heavy as it was yesterday, but LinkedIn looking vulnerable here. This is a high multiple stock, but excellent growth prospects, an online professional network. I decided to take a modest profit in LinkedIn. Looks to me like the stock is clearly ready to consolidate gains here, and I will wait for it to form a new base. If it does, you could see another breakout attempt down the line, but I just felt like this was a risk-reward scenario where the risk was starting to outweigh the reward of owning shares. So LinkedIn looking vulnerable here. How about SolarWinds? Remember talking about SolarWinds? Maker of network performance management software. SolarWinds, after a huge price run, looking vulnerable here as well, working on 4 straight price declines here. Below its 50-day moving average, has broken through support. It is down another 2.1% today to 53.55. So that one is definitely looking vulnerable as well. And, they're really all over the place. Stratasys, maker of 3D prototyping systems. Stratasys, see, it fell below its 50-day moving average a few weeks ago, tried to rally back, is now below the 50-day line as well. So Stratasys looking vulnerable here. And lest we forget about Amazon.com, a stock that had been showing relative price strength for some time. It is down 2.3% today to 245.10, trading below its 50-day moving average. Move on, take a look at shares of Equinix. This is a company that leases building space to companies that want to put servers and such in there. Equinix, underneath its 50-day moving average, it is underperforming dramatically today, down 3.4% to 191.33. So this is a story of just weakness in tech. A lot of former leaders looking vulnerable. The good news is that the selling is eventually going to run its course. New setups are going to present themselves. You don't want to be too quick on the trigger. It's a good time to be raising some cash so that you're ready when new money starts to come in from the sidelines. A lot of negativity about third quarter earnings season, and rightly so. But right when you think the market is going to fall apart, sometimes it can do what's least expected and start to rally into the end of the year. We'll see. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing as we head into the close here. Looks like stocks are going to finish near their session lows again. The Dow down 136 points, 1% to 13,337. The NASDAQ down 16 points, 0.5% to 3,049, and the S&P 500 down close to 10 points, 0.7% to 1,431. Looks like volume on the New York Stock Exchange is quieting down a little bit. It is now tracking about 5% higher than what we saw Tuesday, so it's possible we could see another higher volume decline for the NYSE indices. Does look like we're going to get one on the Nasdaq. Volume has been steadily tracking all day, about 10 to 15% higher than Tuesday. Nasdaq right now, like I said, down about 0.5%. So if volume stays the way it is right now, we'd be looking at 7 higher volume declines for the S&P 500 and NYSE Composite, and I think 4 or maybe 5 now for the Nasdaq. So what the market should be telling individual investors now is to be very careful out there. There's no sense in watching profits evaporate here. Certainly no sense in watching small losses get bigger. I'm a big believer in protecting capital in unsettled markets, and that is what I have been doing lately with the Ultimate Growth Stocks model portfolio. My job is to, help people navigate tough markets for subscribers, be aggressively invested when it calls to be aggressively invested, and be lightly invested when it calls to be lightly invested. And now is one of those times where I think it makes sense to be lightly invested. Now, this is a fast-moving market. Conditions can change quickly, so I'm nimble. I'm ready to change a thesis if I need to. Economic data coming up for the rest of the week. Tomorrow, Thursday, we've got weekly jobless claims, import-export prices for September, and then Friday, the producer price index, latest reading on wholesale prices for the month of September, and the University of Michigan consumer sentiment index for October. Many people look at this as the first reading of consumer confidence for the month of October, but actually earlier this week, my friends over at IBD released the Investors Business Daily Tip Economic Optimism Index. This was on Tuesday. Believe it or not, that index hit a near 6-year high. So consumers feeling confident. I would imagine that confidence is going to be a bit volatile between now and the end of the year. So we'll see what happens. Workday, as far as I know, still scheduled to come public this week. The company actually raised its the price range of its offering. It was initially supposed to be 21 to 24. I don't have the specific, and I generally know what it was, but they were initially going to come public between $21 and $24 a share. I believe it's somewhere in the area of 24 to 26, 25 to 27. So it still looks like there's strong demand for the Workday IPO. Don't know if it's supposed to price tonight or tomorrow night, but we will see. So that is going to trade under the ticker WDAY. Coming up tomorrow in terms of earnings, we've got Winnebago Industries, WGO. Let's check in on WGO while we have a little time here. WGO down 2.3% to $12.19 ahead of earnings. And then Bank of the Ozarks. This is a little-known financial, but at one point a pretty strong performer. It's still holding above its 50-day moving average here, down 3 cents today to 33.42. That's OZRK. Going to be reporting earnings tomorrow. And then Friday, JP Morgan Chase and Wells Fargo. Coming up next, the Tom O'Brien Show, 4 to 6 Eastern. I'll see you back here tomorrow, folks, 3 o'clock for another edition of Breakout Investing.